Hi there, Addy here with buildingsforsaletoronto.com, here with a portfolio of properties. So I've been getting a lot of questions from a lot of the investors that we're working with. Everybody's asking that they want bigger, larger number of units, and they want to get something a little bit larger. And that's one of the things that we keep on getting from all of our subscribers. So here's what I've done. I have gone through a town and looked and picked like 3 or 4 best properties that I find that are in close vicinity, and I put them together in a portfolio for you. So these are actually multiple sellers that are selling these properties, and if you were to purchase them together, you have a nice healthy portfolio that you can start from day one. So what I have over here are 45 units, and these are all in Sudbury. So I'm going to start with 10 units. So this is the first building, 10 units in Sudbury, Ontario. So you have 10 units. The purchase price of these 10 units is $649,900. Cash investment required is $155,976. Net income the property is generating is $3,446. $41,354 is your net operating income. Cash flow generated from this particular property alone is $10,205. 6.4% is your cap rate on this one. This is 10 one-bedrooms located on Main Street, good thoroughfare. You have good rental pool in the area, so you're going to always have good tenants coming in. Again, $649,000 is asking. $519,920 is 80% of your mortgage. Down payment requirement $129,980. $26,000 is your closing cash requirement. $155,000 is your down payment total. Cash cost per unit $64,990. Really healthy number. $729 per unit is the average over there. So your cap rate for this one 6.4%, as I mentioned. Taxes. You have $16,768. Insurance is $1988. Hydro is $64.91. Heat and gas is $93.88. Your weighted water and waste is $79.91. So your total expenses are $46,000. So subtract that from your income that is generating, which is $83,981. That's after your vacancy. You have a net operating income of $41,354. Now, point to note over here, your operating expense ratio is 50.88%. So it's a healthy number, but there's definitely some room for improvement over here. You can find some efficiencies and actually make this property a little bit better. Next one, 15 units. So 15 units, asking price $779,000. So $186,000 cash requirement on this one. Income per month. Net operating income per month $47.24, and your net operating income is $56,685. Cap rate on this one 7.3%. Not to say that you can't improve the cap rate on the other properties, but you can. 15 units in total, 8 one-bedrooms and 7 studios. So let's look into it. So you have $623 would be your first mortgage at 3.5%. Your monthly mortgage payment is $31.11, and again, expense to income ratio is 50.8%. Gross rent per month is $10,008. $120,091 is your $120,091 is your annual. Operating income is $9607 per month, or $115,287. Your taxes are 16%, which is $18,555. $5808 is your insurance. Heat and gas, you're looking at $6870. $13,587 for utilities. Management fee is $11,529. Hot water tank rental is $1,129, and your solid waste is $1,125. While we're on this, a rental is something that I am not a big fan of. Anytime I see a rental, it gets me a little bit concerned. And the reason it gets me concerned is that there is $1,129 being spent per year on this rental. But if I take this and divide it by the cap rate that this one has, if I remember correctly, 7.3% divided by 0.073, that's a $15,000 bump in your valuation that you're losing out right now. So if this hot water tank costs you less than $15,000, I would suggest go ahead and put that in, and you can take this out of the expenses and be able to add that to your bottom line. So even if you can do a rent to own, that would be a better than just having a simple rental. So something to consider. Anytime you see a rental, there's some hidden valuation that you're missing out on. So your net operating income $47.24 per month, or $56,685 per year. After your mortgage payments, this property is generating $19,346. Again, a very healthy return on the amount of money of $186,000 that you're generating. Another point to note is cost per unit is 51,933, which is much better than the other one. Your average price per unit of average rent per unit of 667. That is a little bit lower than the other building that we had. Last one is 20 unit. Again, all in close proximity, asking 1.295 million. So net operating income on this one is 91,960. Cash flow being generated $29,590. Cap rate 7.1%. Cash on cash return 9.5%. Again, income. So your mortgage would be at 80% loan to value, $1,036,000, $259,000 down payment, $51,800 would be a closing cost. The total cash requirement is $31,800. Cost per unit $64,780. $687 is your average rental here. Your cap rate on this one, as I mentioned, 7.1%. So your gross rent income, $164,784 after your vacancy and adding in the laundry. There's $300 in laundry a month, $161,793. Expenses, your taxes are $26,053. $56 is for your insurance. Hydro is $57.17. Your heat and gas is $10,013. Your waste and water $76.54, cleaning and maintenance $62.40, management fee $64.26, and waste of $24.36. Now, all of these have their own management fees included in here, so there's automatically a built-in inherent benefit. If you were to combine these together, you would have one management fee for all of them. The other aspect of it is your cleaning and maintenance. A lot of them don't have a super listed over here, so those are some efficiencies that you can create. You can have a super in one building and they're taking care of all of the buildings, so your cost of super per unit goes really, really low, because now instead of having a cost per super at 20 units, you have them spread over 45 units. So again, net operating income, $91,660 for this one. Take your mortgage payment out, you're generating $29,590. That's cash flow being generated from this building. So your cash on cash return is 9.5%. So let's do a recap of all of those buildings together. So these are all the buildings together. So 10 Sudbury, you have total units 10, 649,900. Cash investment required is 155,976. Net operating income 41,354. Cash is $10,000 here. Your 15 unit, again 779, 186,960 is required. 56,685 is your net operating income. Cash flow $19,000. 7.3% is your cap rate on this one. On the 20 unit, you have 1.295 is the asking, 310,800 is the cash requirement, and $91,660 is your net operating income with a cash flow of 29,590. 7.1% is your cap rate on it. Now here's an overview of the whole portfolio, so you get a really good idea as to what you're getting into. So 2.723900, that's the purchase price. $2.1 million in insurance. Down payment requirement, $544,788. Buying cost would be around $108,956. Total cash invested, $653,736. Now guys, I want to reiterate, all of these numbers would change if the purchase price changes. Also, your buyer cost would actually change a bit too, because you're purchasing multiple properties. So you can get some efficiencies over here. Your annual gross rent multiplier, 7.3%. Operating expense to income ratio, 47.5. Debt coverage ratio, 1.45. Cap rate for the whole portfolio, 7%. Cash on cash return, 9%. Now there's additional detail that you can take a look at for this property, and that's, sorry, I ran through. So for the first year, what you have is operating income of $361,061. Expenses, $171,361. Net operating income, $189,000 minus your mortgage payment, and this is the cash flow that you're generating for this property from year one. Now, if there's some improvements that you have to do, you can pull money out from here. You can do a purchase plus improvement sort of mortgage deal. Your return, your cash on cash is 9%. So this is an interesting and very, very good investment, in my opinion, for anybody that's looking to get started with and looking to purchase around the $3 million mark. You want more information about this or others, feel free to reach out. 877-439-2339, Addy at heyaddy.com. Take care, and I will talk to you soon.